maybe during the summertime, and then see where the rates are and then see if it makes sense to you. Now, just because interest rates go lower doesn't necessarily mean you have to refinance, but it's strongly recommended, mainly because if you get a lower interest rate, that's going to, number one, lower your monthly payment. But it also depends on how long you want to keep that term. Now, most banks are not going to allow you necessarily to keep the exact same term. They're usually going to have you either reset at 15 years, 20 years, 25 years, or 30 years. Okay. Is right now a good time to refinance your home? And the answer is that depends. It's always going to depend on when you bought your house and what your terms are. Typically, most people they buy their home and then they get whatever interest rate is available at that time. So if you've bought your home and let's say for the last 5 to 10 years, the rates have rarely been around where they are right now, which is around about 6.5%. So let's say, for example, if you bought your home probably in the last 12 months, chances are pretty high that you actually had an interest rate above 6.5%. In that case, you most definitely want to consider learning about the refinance process, as you may be able to save some money right now. However, it's still a bit too early, in my personal opinion, as interest rates are still trending downward. Now, we don't know if the interest rates are going to go as low as like 3% or in the high twos like we saw back in 2020. We got to give those types of things some time. The economy is going to be a little bit different. There's no gauge as to what exactly is going to go down to, but we do know it's at least trending in that direction. Okay. So what does that mean for you? All that means is you have to keep your eye on the interest rates just to make sure that you actually get the best interest rate possible. And like I said, right now it's about 6.5%. It's still trending downward, but very slowly. Okay. So we may see I would say a much lower rate probably in the next couple months. Hopefully by the summertime, and most definitely is looking like it's going to be around election season. But again, there's no crystal ball to tell. It's just trending towards that direction. So I would say wait a little bit longer towards the end of this year, maybe during the summertime, and then see where the rates are and then see if it makes sense to you. Now, just because interest rates go lower doesn't necessarily mean you have to refinance, but it's strongly recommended, mainly because if you get a lower interest rate, that's going to, number one, lower your monthly payment. But it also depends on how long you want to keep that term. Now, most banks are not going to allow you necessarily to keep the exact same term. They're usually going to have you either reset at 15 years, 20 years, 25 years, or 30 years. Okay. Very rarely do banks end up doing in between time terms like 27 years or 17 years or 18 years. It's usually going to be in that 5 to 0 category. Now, when you do that refinance, you also must have your credit score in place. Now, in order for you to take advantage of the best interest rate possible when the interest rates do come down, the higher the score, the better and the easier the approval is going to be. I would say you want to shoot for a credit score of at least about 650 to be safe. Obviously, the higher it is, the easier this process is going to be. 680, 720, and beyond. You may struggle getting an approval if your credit score is under 650. There are some banks that will give you the best market rate available if you're a 620, but at the same time, it's not all banks. So keep that in mind as you are going through your refinance journey. Next, you want to at least see if the bank that you did the current loan with, see if they are willing to give you that refinance rate. And then that way you can actually, because they already have everything. They may or may not ask for some check stubs just to kind of verify income, but they already have most of the information about the property. Versus if you go to a new bank, you have to start completely fresh because they have none of your information on file. So they may need tax returns, bank statements, obviously, more information about the home because they don't have any of that. And then be prepared also to pay for an appraisal. Now, a lot of times, some banks, there will be closing costs that's going to be a part of this refinance process. Some banks will allow those additional costs to be added to the loan. And some banks want you to pay something to actually complete the refinance process. So it's really up to you on how much you want to save and what you're looking to do specifically. But as of right now, what you need to focus on is making sure that your score is there, making sure that have an idea of what your home is worth. You could do an easy, you could either ask a real estate agent for a comp report just so you can kind of get an idea of what your appraisal is, because you may be open to doing a cash out refinance. This is when you're actually able to get the difference in money to a certain percentage. Let's say, for example, your house is worth 300,000, and then with a cash out refinance, they allow you to take out 75% of that. So it just really depends on what your options are. But if you're looking to do a simple, basic refinance, you'll be able to do that. And you just talk to your banks about that. Get those questions answered. Make sure that your credit's in place, because the rates are on their way down and you want to be prepared. Now, if you thought this video was great, I'll see you at the next one.